Hello and welcome. Today let's talk about National Pension System, NPS in short, which is a retirement savings scheme. NPS was initially introduced for the benefit of government employees and later on it was extended to others like corporate employees, self-employed individuals, etc. In today's video, let's discuss extensively about NPS. We'll understand what's NPS, who all can subscribe to it, how can you open an NPS account, what income tax deduction benefits you would get, and about withdrawal on retirement. But before we begin, if you haven't already, do consider to subscribe to my channel for more videos. Now back to the topic. NPS is a retirement savings scheme where individuals contribute to the fund to receive a monthly pension post-retirement. These contributions are invested by fund managers in equity shares, government bonds, debentures, and other alternate assets. Depending upon the returns earned by these funds, contributions grow and accumulate over the years. Past performances of these funds have shown a return of 8 to 10% per annum. At the time of exit, that is on retirement, you can withdraw 60% of corpus and remaining 40% has to be compulsorily invested in buying an annuity plan which would fetch you a monthly pension. Now let us see who can subscribe to NPS, that is who can open NPS account. Central and state government employees, private sector employees, self-employed individuals, workers of unorganized sectors, and even non-resident Indians in the age group of 18 to 70 years. Subscribers can continue to contribute to the fund till they reach 75 years. Now let us see how the NPS Trust has performed during last 5 years in terms of number of subscribers. Number of subscribers during financial year 17-18 was 1.16 crore, which has now increased to 1.54 crore during financial year 21-22. Total contributions during financial year 17-18 was 1.81 lakh crore, that is 1.81 trillion, which has now increased to 5.01 trillion. And asset under management was 2.3 trillion during financial year 17-18, which has now increased to 6.85 trillion. So there is an increasing trend in terms of number of subscribers, contributions made to the fund, as well as asset under management. Now let's talk about contributions to the NPS account. Employees as well as the employer makes contribution to the account. This is very similar to Provident Fund, where a part of the salary of the employee is transferred to the PF account and the employer makes a matching contribution. Contributions made by the employer can be claimed as business expense and employees get income tax deduction benefits. We'll shortly discuss in detail about these tax deduction benefits. As I had initially told, these contributions would be invested in equity shares and other specified assets. You have two options to invest your funds. First is active choice. Choosing this option would let you invest in equity shares up to 75% of your funds till you are 50 years, and thereafter proportion of investment in equity shares would reduce to minimize the risk. You can opt for this choice if you have good knowledge of stock market investments. Next is auto choice. Here, proportion of funds to be invested or predetermined. If you are new to the stock market or if you have limited knowledge to manage your investment portfolio, then auto choice is the best option for you. There are two types of NPS accounts. First, Tier 1 account. This is a restricted and conditional withdrawable account. We'll shortly discuss about NPS withdrawal. Contributions made by you as well as your employer are usually credited to Tier 1 account and you get tax deduction benefits. Next is Tier 2 account. This is a voluntary withdrawable account similar to mutual funds. You can have Tier 2 account only when you have an active Tier 1 account. Unlike Tier 1 account, you don't get income tax deduction benefits for contributions that you make to your Tier 2 account. How can you open an NPS account? If you are salaried, then your employer would take care of it. If you are self-employed, then you have two options. First, you can open the account online or you can visit the authorized bank to open the account offline. Once you are registered, you would get permanent retirement account number PRAN and login credentials. You can log into the portal to actively manage your investment portfolio. Now let us see how can you open NPS account online. Navigate to the NPS Trust portal. Here you have two choices of CRA, Proteon and K-Fintech. Let's select Proteon. Click on National Pension System, Registration. This will navigate you to the online subscriber registration form. Once you fill in the relevant information, your account would be opened and you would receive login credentials. As per the NPS Trust portal, these are the registered pension funds which would manage your investments. Now let's understand what tax benefits you would get on your contributions to NPS account. If you are salaried, then under section 80CCD1 on your own contributions towards tier 1 account, and this is up to 10% of salary but within the overall limit of 1.5 lakhs under section 80C. So maximum deduction including deductions under section 80C would be 1.5 lakh. Next, under section 80CCD1B, this is in respect of additional voluntary contributions towards tier 1 account, and max deduction that you can avail is up to 50,000. So total of 2 lakh deduction you can avail. Next, under section 80CCD2, this is in respect of employer's contribution up to 10% of salary. This limit is 14% in case of central government employees. For state government employees too, this limit has been enhanced to 14% during the recent budget. And once the finance bill is passed, this would be applicable retrospectively with effect from 1st April 2020. Salary here would include basic salary plus DNS allowance plus sales commission as a fixed percentage of turnover. If you are self-employed, then deduction under section 80CCD subsection 1 would continue in respect of your contribution towards tier 1 account, but here the limit is up to 20% of gross income but within the overall limit of 1.5 lakh under section 80C. So max deduction would be 1.5 lakh, and deduction under section 80CCD1B would continue, that is up to 50,000. So maximum deduction here would be 2 lakh. Further, in respect of section 80CCD2, you will not be able to avail any deduction because there is no employer's contribution here. All these tax deduction benefits would be available on contributions made to tier 1 account. In other words, you will not be able to avail any tax deduction benefit for contributions that you make to your tier 2 account. To understand this better, let's consider a scenario. Let's say your basic salary is 50,000 per month. So for the year it is 6 lakh. And other allowances are also 50,000 per month, so total of 6 lakh for the year. Let's say NPS contribution by your employer would be at 10% of basic salary, that is 5,000 per month, so 60,000 for the year. Your contribution to NPS account would be 10,000 per month, so for the year it is 1.2 lakh. And let's assume your income from other sources, say rental income or interest income, would be 20,000 per month, which is 2.4 lakh for the year. Let us also say your deduction under section 80C, that is PF at 12% of basic salary, would be 72,000 for the year. So total salary would be 6 plus 6, 12 lakh, and NPS contribution by your employer would be 60,000. Let's reduce 50,000 towards standard deduction. So net salary would be 12.1 lakh. Other income is 2.4 lakh. So total income would be 14.5 lakh. Now let us see what are the deductions. First, in respect of employer's contribution, 60,000. Then with respect to your PF contribution, 72,000. Then your contribution to NPS account, and this is under section 80CCD1. Maximum of deduction under 80C and 80CCD1 can be 1.5 lakh. Here the total is 1.32 lakh. And deduction under section 80CCD1B in respect of voluntary contribution. Here your total contribution is 1.2 lakh. After reducing your deduction under section 80CCD1, which is 60,000, you have balance of 60,000. Now deduction under section 80CCD1B can be maximum 50,000. So the max deduction that you can avail is 50,000. So total deduction that you will be able to avail is 2.42 lakh. So taxable income would be 12.08 lakh. We have now reached the last part of the video, that is withdrawal of funds on retirement. You can exit NPS account on retirement, that is when you reach 60 years. You can withdraw up to 60% of corpus, which would be tax-free. For the remaining 40%, you have to compulsorily buy an annuity plan. Whatever income that you get out of this annuity plan, that is pension, would be taxable. Annuity plan means you make lump sum investment to earn guaranteed regular payments for rest of your life. That is the pension here. But if the corpus is less than or equal to 5 lakh, then you can withdraw the entire accumulated wealth. In other words, if the corpus is less than or equal to 5 lakh, then there is no compulsion for you to buy annuity plan. To understand this better, let's use an online pension calculator. Let us navigate to the NPS Trust portal. Select date of birth and how much you would contribute per month. Here I am considering 10,000 per month. If you open your account at the age of 30 and contribute till you are 75, then total years of contribution would be 45 years. Let's say the expected return on investment would be 9%. And you would buy annuity for 40%, and let us assume annuity rate to be 6%. So your total investment at 10,000 for 45 years would be 54 lakh. Considering return at 9%, this would grow to 7.46 crores. Out of this, you can withdraw 60%, that is 4.47 crore, and for the balance 2.98 crore, you have to buy annuity. This would fetch you a monthly pension of 1.49 lakh after 45 years. You may use this calculator and calculate pension according to your needs. I'll leave the link in the description. That's all I have for you in this video. Hope this was helpful. If you enjoyed this episode, you may like the video. You may spread knowledge by sharing this video with others. Thank you for watching.